Good morning. Welcome to Trade Live with IT with myself, Rich McDonald, and Luke Moore, number one PCM.
Good morning, everybody. Welcome to a lovely, kind of slightly bleak kind of Tuesday.
What? Bleak?
Look at
It's
the weather.
a beautiful, beautiful thing because we got red all across our screen, people.
Yeah.
I've even got my red top on.
Risk off, and the weather's not looking particularly great.
Wax on,
Wax on, wax off.
wax off.
Exactly.
And they tried to give it wax on with Palantir, but the market was having none of it.
Yep, absolutely none of it. It beat, but not by enough.
It was a strong beat, actually, wasn't it? It looks impressive.
Yeah, but if you've got a 650 million PE, then clearly you've got to beat by a lot, and the market said it's not enough.
So, yes, we are into November. The hunt for Red October failed. It sunk badly.
Yeah,
But November not looking so pretty, is it?
Not so far. So far.
So
What
far,
are we? So far,
no good.
So far, no good. We'll be all right. We'll get there.
Shall we have a look at what's coming up on today's show?
Yeah, let's have a little look.
So, we've got Rachel Reeves coming in for a special Oh, no, we don't. No. She's busy.
She's on TV today, though, I heard.
It's so when we're on air, so in about 40 minutes time, Rachel Reeves is coming on television to tell us all that taxes are going up.
Yeah, can't wait for that one. Cheers,
Brilliant.
Rich. Right, I will be here through till 8:15. You're going to have a little sprinkling of Guess the Chart in there while we dissect what's going on at the Open this morning.
And then you've got to choose between myself and Elliot or Rachel Reeves and tax rises. It's completely up to you, but we know which one's going to make you happier.
Yeah, true.
And it's got Julian Wheeler, and Julian Wheeler, my favourite man at the moment, yet again. He's already asked, am I going to get him another bottle of whiskey? Because, of course, he gave me that beautiful Amazon zero DTE trade last week.
Nice. Okay, so he's on fire because he had Alcoa the week before, Amazon zero DTE,
MongoDB.
MongoDB. He did also have the toy manufacturer though that didn't go to plan.
Yeah, Funko. Yeah,
Funko didn't go to plan.
yeah. That
75% hit rate though. We'll take that.
Yeah, and we managed. I don't know if anybody at home did Funko, but we managed to avoid it here because it looked a little bit too
funky,
too risky. Yeah, very good.
And then you've got John Mayer coming in at 9:10 to give you a little bit of commodity corner. Nice,
Strong day.
very strong day. Good morning, everybody in the chat. Good morning, Arsax. Good morning, Shrimp Fred. London Guide, Paul Williamson, Andrew McKelvey, of course, there. BP results, no doubt. We need to take a look at those. IWG as well. Maturin, Lee JS. Good morning.
Lee JS, let's go.
LFG.
The Bears are out.
The Bears are out. Yeah, the Bears have to come out once or twice in a while because otherwise the Bulls get too blown away with them. Do you know I'm firmly on with Beachy on days like this. Is that I think we do end up solving a lot of these problems because I looked at this morning. Can you give me one reason why we're risk off apart from Palantir's results?
How many do you want?
Well, specifically,
Yet another deal from OpenAI. So we've already got 1.4 trillion of commitments. Let's just throw another 40 billion in there.
Did you see Elon's interview with the Elon did an interview with the All-In guys over the weekend? It was just, I mean, he just destroyed Sam Altman.
Did he?
Just went for him, absolutely everything.
Oh,
Apparently, Elon was the one that backed the funding for the first 3 rounds. He was the one that picked OpenAI. He's like, oh, you should call it open source, but not open source, and not for profit, but definitely for profit AI. He's like, what a clown, complete clown. Went for him. Definitely worth recommending. About an hour and a half of your time.
That sounds like a good one. And I had a wonderful day off yesterday, Luke. Thanks for asking.
Did you?
I did. I went to the dentist.
Oh, fantastic. What a day off from working, 7 till 10? And then...
Well, that's job number 1. And then we got job number 2, making TikToks.
Okay.
Job number 3,
Trading.
Yeah.
Job number 4?
Being a great son. But yes, I have to get implants.
Do you really?
I am getting implants.
Oh, what have you got? What do you have? Do you have some work to do?
So, what's that?
As in, have you got like? Because I
I've
had a root canal once, and it was horrible, and you have to do the whole, get it drilled out, all that kind of stuff. This is not what the people want to hear at 7:30 in the morning.
Well, they do because they know how happy I am this morning. So I'm just evening out the. I've got a lot of pain coming to me in the next couple of weeks.
Yeah, fine. So what do you need to have done?
Yeah, an extraction and all kinds of shenanigans.
Not good. Not good.
£2,500 for a tooth implant?
Well, that's not what
sound
the
right.
Well, the tooth fairy's prices have gone up.
Yeah, exactly. Yeah,
used to be a £5 back in my day.
reverse tooth fairy.
Yes, but look, should we jump into some overnight action?
Lee JS saying going up a cup size.
Do you know the funny thing about these cups?
Which ones?
If you drink to the bottom of that cup,
Yeah.
it says more ? As in the market for more. It used to be our old strapline. But the problem is, for right-handed people, the message is upside down. When you get to the bottom of your cup, it says more. It was made for left-handed people.
Left-handed people.
Yeah, it was.
There you go.
These are the real things we have to deal with in an office of ours.
Go on then, take us into some overnight action. Let's see what's going on. God, I'm going to pierce myself with this as well.
With your new cups.
yeah, try
Don't pierce your new cups.
burst the bubble.
Right, yes, risk off this morning, clearly. Last I checked, we've got the Nasdaq down 1.3, we've got the S&P down 0.9, Dow down 0.4. Shall we bring some prices up onto our screens, please?
And at last, the pain that I've gone through, that is back below my lowest short call level. So I'm short the 6,800s. This is the first time it's been back below in a matter of a week. So you can see all the short calls there. Where are they? 6,800, 6,850, 7,000, 7,100, 7,200, 7,200, 7,600.
Fine.
Slightly bearish.
Slightly bearish. Yeah, but you're long stock. So you've got the long S&P 7 quid there. So this is covered, right?
Well, but that adds up to about 200 a point.
Fine.
So 7 isn't really
Covering it.
it's not quite delta neutral.
The maths isn't mathing.
So we've got the VIX up 4%. The FTSE is the outperformer of the day because it doesn't have any AI.
Exactly, yeah. So, I mean, I was looking at it just before I came in. Basically, yesterday was one of the weaker breadth days over in the S&P 500. So it was only about...
adding to the last 3 days of last week, right?
Correct, yeah. So with the index was up yesterday by the close, but I think it was only about 120 stocks that were up. 300 and the balance, 380 were down, and it was basically all the tech stocks that were holding it up. So actually, I was joking at the start of the show. I think Palantir being off has rocked the boat a little bit when it comes to confidence. Did you see the great quote that he came out with, Alex Karp?
Which one now?
So Alex Karp, so of course they're trading on, what is their PE at the moment?
Well, the P is slightly irrelevant because it's the sales. They're 120 times sales.
Yeah. So Karp came out with a quote: "We are literally in the nosebleed zone. There is no one else with us." Yeah. You just think, come on, that is not how you run corporate governance and messaging to shareholders.
Now, our good friend Napster messaged me last night. He had a short position in. He told me about 10 to 9. He's like, right, I fancy that these pop up on numbers. I'm going to have some offers in. He got filled at 221.
Oh, nice.
There. Napster is short there. And he said, oh, that's quite nice. I've just been watching Married at First Sight and got my fill in. But look at the way that Alex Karp got it handed to him in that call. So 210 traded, then down to unchanged on the day at 206. And since about 11 p.m. last night, this thing has just been selling off. Yep. So
I was having a couple of calls with people just at the start, like as it came out. Yeah, I saw the numbers come through and they were just beating. So the one thing that they did do is their revenue was up 63% quarter on quarter to 1.18 billion, but from memory the expectation was something like 1.09, so it was just a very slight beat. They did raise their full year outlook for revenue to 4.4 billion, which is positive. Their earnings per share was a fairly okay beat. 17 cents was the expectation, 21 is what they delivered.
I think.
But when you've got 21 cents of earnings on a share price that's 220, You're getting into crazy
Let's
valuations.
set two things separate here, right? We are not saying that Palantir numbers aren't good. We're not saying that the business isn't incredible. It's absolutely incredible. But the thing trades on over 100 times sales. The closest to that is a Snowflake or the cloud one.
Well, no, I imagine the kind of Oklos of this world are probably near there when they, when they don't have the revenue pouring in. At least Palantir is getting paid.
No, but of the
CoreWeave?
software CoreWeave, yeah.
CoreWeave.
So, so they're on about 25 to 30 times sales. So the very top end of this sector that has ever been involved is 30 times sales, and this thing's on 100. Now it's only got 63% sales growth. Right? So it's not like it's coming down to 50 times anytime soon.
Yeah.
Right? You're talking about 2027. Now, of course, Dan Ives was on CNBC last night. He goes, yeah, but I think they can do 8 billion of free cash flow. And Mike Santoli just turned and laughed at him. He went, that means it's on a 1.5% free cash flow yield.
Which is huge.
No, it's tiny.
No, it's not, is it?
1.5%.
But when you're not making any money when you're not making huge amounts of money at the moment, though, what have they got? Their revenue is up to 1 billion at the moment. So they've got to go.
You want a high free cash flow yield.
Yeah, of course.
So 1.5% is nothing because you get 5 in the bank.
Sorry, yes, I saw what you mean. Sorry, I know what you mean. But the number itself, relative to what it is now, well, they only made.
Yeah, but that's what I'm saying. So the only thing we're saying is absurd is the share price. 8 billion of free cash flow will be brilliant, but not when it's relative to the market cap.
No.
So this thing, at the very best, will go sideways for years, and will still be $200 in 3 years' time. Why would you invest?
Yeah. Well, the thing is, it's been one of our clients' favorite stocks because it's just been going up and to the right.
It's
just
Robin Hood's favorite stock.
Up and to the right. And I think that's probably what's playing in here is people are seeing these numbers going fantastic, but then having the exact same conversation you've just had. What do you need to continue to push this on? You need the expectations and the guidance that we're going to have for the next 2 to 3 years. They're actually gangbusters. It's this and it's this and it's this. So instead of being trading at 120 times sales, we're actually expecting 150, 160, and that's going to be the next leg higher. But we didn't get that, which is insane to say.
Well, no, it would, because then your sales number, then it would come down. Because if their expectations were higher, then obviously the multiple would be lower.
But then that's what I'm saying. But the price would have to expand. That would be what pushes the price on.
Yeah, but the numbers are the numbers, right? It's there was nothing that could expand the multiple any further.
Yeah, correct. And I think that's what the market is killing.
Yeah,
that's what the market is killing.
So yeah, down 6% Palantir at the moment. Let's see how it ends the day. But that is, of course, having big effects on all the rest of them as well.
Can I give you a different story? Something that we were being asked for yesterday. So I tell you what, I'll just pop this up on my screen. There's now two of the Mag 7 have now tapped the debt market for financing. So last week we had a lot of the Mag 7s earnings, capex expenditure is just going to continue to keep motoring on. There's no doubt about that. And so the conversation is now about how do you pay for it. Now Meta got killed because they had that one-off tax charge and then raised debt, and people were thinking about leverage, cash flow, what's happening.
And their revenue uplift from 70 billion a year, their revenue uplift is 5.
Yeah, which is not material. So then you look at Alphabet. Now, Alphabet's a different beast entirely. They're probably one of the biggest free cash flow generating companies in the market outside of Microsoft. They announced yesterday that they were going to raise a ton of debt, which I looked initially and thought, why are they doing that? They've got huge amounts of cash. Why take on more leverage to finance these things?
Yeah.
And we had a look at it this morning. So these are the numbers that came through. So they raised $25 billion in total, which was massively oversubscribed. So they had $90 billion of orders for their debt. $25 billion of bonds were written. That split 17.5 to the US, 6.5 billion euros in Europe. And the interesting thing here is the 50-year tranche was priced at just 1% over treasuries, which is nothing, absolutely nothing. Like the risk premium that you're taking on by owning Google at that point over treasuries is obscene, right? But the point is, why does debt make sense? And this is what I was asking clients and what clients were asking me. Interest payments are tax deductible. Whereas if you're issuing equity and therefore dividends, they are not, of course. And they're also non-dilutive. So whilst these fund companies have huge amounts of cash on the balance sheet, they don't mind taking on this debt because it actually makes their tax picture look a little bit more efficient. So taking on leverage, taking on cost in order to do that.
Yeah, but the advantage is the leverage. You know,
Well,
you're
yeah,
leveraging yourself into the story,
Yeah.
which is, of course,
top.
what are
At the top. But this is what Oracle started. Oracle started it.
Yeah.
Because Oracle weren't really invited to the party, and then they were by Trump.
Yeah.
And they had to massively raise equity, raise debt, and you just see what they've done. Oracle popped on the news and have been bleeding ever since. So, you know, this is the next wave of this financing story, this capex financing story is debt and leverage. So watch out.
Well, that brings us beautifully on to the next story. UBS chair warning of looming systematic risk from private credit ratings. Yet again, there it is, credit, credit, credit. It's the only thing that people know how to grow an economy by and grow their profits by. So this time it's the insurance companies. So the US, now where does he say here? The US life insurers are filling their books up. Here we go. US life insurers, which must hold a certain amount of capital and investment grade assets, have been amongst the biggest buyers of private credit and private letter rating services. The whole article is about these new mini rating agencies that are popping up in order to give a tick box on the rating for credit.
And they're not Moody's, they're not S&P, and they're not Fitch.
And they're not that great to start off with. So you imagine. So this is where the chairman of UBS is saying, look, there is a lot of private credit loans here and not a lot of disclosure. This is reminding him of the 2008 subprime banking issue. Now it's insurance companies.
Yeah, yeah. That was what that reminds. I mean, that makes sense. Why I was seeing. Although I should have screenshot. I want to keep it. The old memes of The Big Short, where I can't remember the name of the character, but he's in Miami and he's talking
Steve
to that.
Carell.
Yeah, Steve Carell. He's in there. He's talking to the property broker, and he comes away and he's like, "There's definitely a bubble.
Yeah,
there's definitely a bubble. Buy them. Buy them all." What else have we got this morning?
BP. Shall we look at a proper company? A proper company that makes money and
Buys back shares.
So net income of 1.16 billion. All their 6 projects are ahead of schedule.
Here, let's see if I can get it up on my screen.
The net debt's 26 billion. Of course, that's been a focus in previous quarters. And they've got divestments coming of over $4 billion this year.
Here we go. I've got that up on my screen for you there. What are they going to do, the buyback? They're going to keep the pace of its quarterly buyback, $750 million through the third quarter. Murray Auchincloss, is that how you say that? Auchincloss?
That's close enough, yeah. It's
Yeah,
good Scottish
Auchincloss.
accent for you.
Expected or announced disposal agreements to reach around $5 billion for the year. Do we have any early morning calls, Mr. McDonald?
It might be a wee bit early yet, are we? So, yeah, we'll get those for you just before the bell.
Okay. I mean, look, takeaways there. Strong beat. Numbers decent. Buyback is supporting the shares, and the divestment program that they've got there is delivering the goods. They're making good progress on cost cutting, strengthening their balance sheet. What more do you want? They have taken on slightly more debt this quarter. Their debt gearing is 25.1% versus 24.9%, which was the expectation. Early take is that it was slightly higher, but certainly in a manageable range. Elsewhere, the only other company that I saw that was that I've kind of saw before I got in was Associated British Foods. Did you see that this morning?
Yeah, the review.
The review, they are potentially spinning off Primark. which is, well, I mean, I couldn't tell you any other businesses that are in that group.
Well, that's the problem. It's the sugar, isn't it?
Yeah, let's bring that
Or the food unit.
bring it up on my screen for you here. There you go, that's up there now. So they have said that whilst no decision has been taken, the outcome of this review may lead to the board deciding to undertake a separation of the Primark and food business. Okay, so here you go. They also own grocery brands such as Ovaltine, Ryvita, and Twinings.
Oh, Twinings, okay.
Twinings is fairly decent. For your what do you take when your lemon tea in the morning? Is that a Twinings tea bag you got?
But Anna, talking about this, I saw Admiral Cucumber. Don't worry, I got you. We'll get you a cup. So basically, without giving too much away, in the next couple of months, the mugs are going to be the wrong colour.
Yes, correct. Yeah.
So there will be some mugs available. If anybody's in London, feel free to pop in, give me a shout, and we'll get a mug to you.
What, new ones or the old ones?
Well, I don't think we've got any new ones
not
on order yet.
No, we didn't. Do you know we need to tap up? Jess is our merch. The merch queen. Yeah. So we'll have to test. We'll have to tap up Jess to get them on.
Just had a new umbrella as well. So Lee JS and Admiral Cucumber. If you're ever around the office, it's in Cannon Street, then a mug is yours. Otherwise, the problem is, if I say I'm going to send it to you, then I'm going to have to send 20 parcels out.
Just 20? We've got 2,300 subscribers.
Yeah, exactly.
Andrew McKelvey, I see you there, my friend. We haven't yet taken a look at IWG, but let's have a quick look at them now. The Reuters feed on our...
Quick, while you're looking at that, Hugo Boss, lower. Hugo Boss cutting guidance. They're just a little bit too expensive, aren't they? Little bit. Just
What, the clothes or the stock?
the clothes, yeah.
Yeah, I mean, there's a beautiful shop up on Cheapside, and I walk past and I'm like, that is coat goals, that is jacket goals.
That's it. The fashion is ideal, but it's just a little bit too expensive. Yeah. It's perfect shop for sales, just like Rag and Bone.
For sales?
When the sales are on and it's like 30% off, done. It's the right price.
Yeah, you get yourself down to Bicester Village, pick up all the stuff you
need. They got the Boss there.
I'm pretty sure they do, yeah.
Nice.
IWG, their revenues, the revenues for the year, $947 million. Let me zoom in for you, even though Reuters doesn't seem to want to format this morning. We've got revenue of $947 million. They've confirmed their guidance for 2025, and they're on track to deliver an EBITDA of at least $1 billion. Do we have any early calls yet? Have they come through? In fact, I've got them here. They've come through. So the market, Singers, our good friends over at Singers, they're calling BP up 1%. We've got IWG being called unchanged so far, and I will launch the, I'll look at the auctions whilst I'm here.
Right, quick upgrades and downgrades then. Your upgrades of the day are Moncler, Porsche, Ryanair. Ryanair, big turnaround yesterday, down 3% to up 3%. On the day.
They had their load figures, I think, didn't they, for last month? Wizz Air have given their figures this morning. Their October load factor is 92.9%. Passenger traffic up 13.1% on the month. So that may lift the airliners today.
Swedish Orphans have been upgraded. And you've got, on the downgrades, Next. So Next downgraded, along with UBS and Hermes.
Hermes downgraded. After getting all those upgrades about 2 weeks ago. Who downgraded them?
Oh, I don't know. I don't have the details, just the full list.
I wonder.
Right, it's Producer Phil saying my personal opinion.
Yeah. What else have we got?
Let's have a quick break, and then we shall be back for giving you more price expectations for the open, how the auctions are going, and we're going to touch on Nike as well. Lee JS, we see you there. sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome back for the opening bell this Tuesday, the 4th of November. And we are going to be keeping an eye on BP. We're going to be keeping an eye on IWG. We're going to be keeping an eye on Wiz. We're going to be keeping an eye on maybe Foods. What else are we keeping an eye on?
Hopefully more interesting stuff than that.
What? A Primark spin-off? You joking? That's the most important story out there.
You've been waiting. Hugo Boss. So Hugo Boss coming in light. They're going to get a bit of a smash, I would imagine. And then, of course, we got the downgrades in UBS as well. But really, it's these German indices because the Germans are looking down 1.1% this morning. FTSE outperforming at 40 basis points. And the S&P, NASDAQ not finding any love just yet.
God, I'll tell you what, I've just spotted. Look at Bitcoin down at 104. Look at that.
Ah, yeah. Now, Andrew McKelvey mentioned SWC buying 4 more Bitcoin, but forget that. We've got them coming in tomorrow. So the CEO and founder of Smarter Web Company coming in tomorrow for an interview round about 9:15. Send in your questions. I know there's going to be some questions in there because it's a very different situation from when he has been in the studio before. So those of you that are holding and hurting, join the club. Both of us here. Yeah, get your questions in. Don't worry, I've got a few for them. We got 30 seconds to go before the opening of this morning's London Stock Exchange.
Okay, so as an indication, I've got BP up 0.6. I've got IWG up 0.55%. What else was the one we were looking at? Hugo Boss. This is where I'm going to find out whether I've got the right permissions. I do. Down 1.8 as an indication.
Down 1.8. Right, should we get our bells out, Mr. Moore?
You going with the Bull and Bear or the LSC? What do you want?
Where's our London one?
Double bells, right here, quick. There you go.
Right, what is BP going to be doing on the back of numbers then? Let's wait until this market opens up.
Up 0.5%. Opened at 449, spot 7, immediately squats down a penny.
That's the kind of volatility you want from numbers. Palantir, forget 9% up and then 6% lower. You want up 30 basis points. Good old UK.
And IWG up a third. There you go. Both up roughly the same in a market that's down a third. So there you go. So numbers is helping you outperform this morning. What else have we got?
Well, we're getting Bellway getting hit, as is Land Securities. Land Securities down 2%. Fresnillo getting obviously silver's turned around, gold has turned around. We got Next down 1% on the downgrade, and
Associated British Foods not open yet. Now looking like they're going to open 6% higher. Who tells you didn't get any volatility?
Is that the Primark?
That's the Primark story.
The Pre-Marsh?
Pre-market. Free. Did you know? That would have been a better one, wouldn't it? The old pre-market, pre-mark.
Right, Wetherspoon's small up. Still quite a lot of stocks not open yet. Ah, there they are. Right, the miners are coming through. Glencore, Antofagasta getting smashed, as is Scottish Investment Trust. Luke Moore just saying that he added to the position yesterday.
11.73 paid, 20p in my face. Mine. Burberry also down. Burberry also down in...
Oh well, that's interesting because if Hugo Boss did we see if
Hugo Boss.
You could see Burberry come off more there.
Hugo Boss down 1.9%, not yet open.
Not yet open.
Not yet open.
Looking down 2%. Okay, so Burberry about right. Vodafone has given up all those gains from last week. 93 pence it touched, now only 86. Remember, lot of debt there. So Vodafone, not immune from debt itself.
No, certainly not. No, certainly not.
But yeah, very weak day across all the financials, all the mining stocks, and then of course those with American tech exposure as well.
Yeah.
Where's your safety zones, Luke Moore? It is in Diageo.
Diageo up 1.04% to trade 17.93.
I'll tell you what.
Is that a kind of retailing read across from Primark? I doubt it.
No, I think it's a search for safety. So get your money into the pharma, into the booze, into the supermarkets. Yeah, that's where you're going to hide in this tech fallout.
Yeah. Okay. The mine is still scuttling along the bottom there. Fresnillo, Antos, and Anglo American, the three worst performers in the FTSE 100. I'm just going to take a little look in the 250. If you want to take a look at Europe while you're there.
Yeah, go on then. Hermes down 2% on the back of that downgrade that we told you about. And then, of course, weak numbers from Hugo Boss, Kering.
It's open. Hugo Boss down 3.6%.
3.6.
What's Burberry doing?
Well, that dived at the last minute, didn't it?
Did a little bit. Burberry.
We got Gucci straddling the 300 euros. Burberry
down 1.15, trading just below 12 quid.
It's doing all right. ASML, I would have imagined, I'm going to have a little pop at ASML. We're going to sell 20 of those at 9.11.
I'm on the way down.
We moved the market there, didn't we? 9.10.5 bid. Right. So yeah, ASML, of course, after a magnanimous few months, then I would have imagined.
Magnanimous? I don't think that's a word. What is it? Define magnanimous.
Should we have a game of Scrabble?
Magnanimous means generous or forgiving, especially towards a rival or less powerful person. So is that the right context you use it in?
Yes, had a very generous 3 months considering its numbers weren't that great.
Have they had a forgiving? Have they forgiven anyone towards a rival?
Shareholders have forgiven the numbers were amazing and sent them up 50%.
And then they go down 1.
Well, but that's in the first 10 minutes, Luke Moore.
Need a jury's inquiry on that one, I'm not sure.
Steward's inquiry or a jury's inquiry?
Steward's inquiry. High quality financial content this morning, guys. Don't go anywhere else. Give us a like and a subscribe if you want more of this.
Right.
Vocab.
Who thought about changing over to Rachel Reeves to see her talking about tax? I think I'm going to do it in a minute.
Yeah, your daily thesaurus with Luke and Rich.
Right, we got Cable at trading 131. Is it going to hold the 131 level? As she tells you, taxes are going higher.
Producer Phil just mentioning there that Associated British Foods still not open. Let's see where they are. They're pulling back a little bit now to just up 3%.
Copper, geez, it feels like it's got a copper around their
they're
ankles.
opened. They're opened 23.50, and wow, they're just getting smashed straight back down. ABF have opened up about 1% or so, now down straight back down. They're now trading up 0.5%. They're moving around. 22.94 offered on a 23.50 opening print. And now they're trading down. So having indicated up 6 in the pre-market, they're now down 0.5%. Whack, yours.
That's why we have an extended auction, plainly. Correct. Right, the commodity world then. Yes, silver only down 30 basis points, back below 4,800. But copper is the one that is getting beaten up. That's why Antofagasta down so much on the day. Copper really struggles around that $5 a pound level, doesn't it?
Yeah, you won't see it on there, but gold back below 4,000 as well. 39.94. I'm gonna wrangle the flow desk this morning to try and get that put back on because it's daft that it's not on there. Yeah. I'll get that put back on. 39.94 back below 4,000. Is that the first time gold has been back below 4,000 in a wee while? Let's have a quick look.
Adam DeLuz, give Luke a call, give me an email after the show, please. You're not in trouble, don't worry.
No, it's been below for the last couple of days. It's actually slightly trending back up again. Yeah, spot gold. It's massively come off its highs. consolidating, I would say, around this 4,000 figure. So yeah, there's not much going on there. What else are we looking at this morning? VIX. There was a shout on the VIX. Do you want to have a little look at the VIX? That was creeping its head higher on this tech move.
Yeah, go on. Let's have a look as you're screening that up.
No, you go for it.
This, yeah, Anto's getting smashed now.
You're on screen there, Rick.
Yeah, down 3.4. Anglo's getting smashed as well. Remember, Anglo's is that copper play, of course, now as well.
I will go to the VIX on here.
And Glencore, here we go. Is Burberry's doing all right.
Yeah.
Rolls-Royce being an AI play because of its mini
nukes.
Should that be down more?
Where's it come from? Hang on a sec. Rolls.
It's just.
I mean, this thing was going straight and up to the right the last time I looked at it.
12 quid.
That's good. That's one of the bigger down days it's had in recent histories.
Yeah.
Pull up that if you want to pull up my.
The FTSE is weak, isn't it?
Yeah. I mean, that is. If this is the daily, and this is 15 minutes. I'm going to say. Let me just have a look. Pull back out on daily. I mean, it's a blip in the long term, up and to the right, isn't it? I mean, it's basically.
Well, that's what I'm thinking.
Technicians would say it hasn't gone back to making a high. So I'd be keen to see what Axel would say about that if we get the chance to speak to him on it. But to me, that is a rejection of an all-time high.
Yeah.
And we make a high low ish. Just about by a couple of smidges.
But I'm basically just looking for obvious, less obvious plays on this turnaround. Because if we have a look at the US, let's have a look at these 24 hours. Of course, at 8 a.m. they shift round to the daily move.
9 o'clock, we're back to normal now.
No, 8 a.m. the 24 hours changes to today's moves. So Palantir is now down 5.5.
What? Sorry, is when the daily percentage change resets.
Exactly. So yeah, so we can now have a look at what they are down on the day.
Okay,
Palantir down 5.5. AMD numbers tonight down 2.2. Broadcom, CrowdStrike, Oracle, Amazon. There you go. It's all those AI names. I wonder if that continues into the afternoon as well.
But why? Because we know the story about Alphabet raising debt. We know Palantir's numbers. They made more money, but not as much as I think the market was really hoping for, X of what the estimates were.
Well, the market is telling you we are no longer paying and expanding multiples, right? We're at a stage now where you could have the best set of numbers and you're still, stocks are too high. The market's too high. That is telling you, the price action there is telling you that the AI story for now is done.
Today. I mean, Palantir isn't.
Well, no, this is a big turning point now in the actual market, right? To see the S&P reject 6,900 and now be back below 6,800, then this is you got to pay attention to those kind of
levels,
telltale signs that
markets like filling gaps as well, don't they?
Yeah. So it's definitely going to be an interesting week. Of course, what will happen is all the stocks will be down today, and then AMD will come out and
AMD will beat, and we'll be straight back up.
But again, what's the chances of AMD kicking on from here, right? Because it's already had.
I mean, AMD's certainly not one of the stronger names in the sector. Look at that so that's your daily. It has been. I mean, those long tails need to get fixed, don't they, on those charts? But we've kind of traded sideways for the past week and a half.
Yeah, but is up 110% on the year? Is that enough? Only up 110%?
Yeah. I mean, most stocks are off the April lows. Most tech stocks are.
Well, but this is much more off the April lows. April lows, it traded at 75. So it's up 200% from there.
Yeah, quite incredible, really. I mean, I think there's some stories as well over the last couple of days about Nvidia's dealings with China. If you get any kind of headlines on that, and no doubt going to change the flavour of the sentiment. I wonder how much Trump will be watching this and keeping an eye on things, like he does.
Yeah.
Does Trump watch the show? Yeah. Trump maybe watches the show. Let's hope.
In short, the market is priced for absolute perfection, and Palantir came out with perfection, and it still didn't go up. So that is, just some alarm bells there with the S&P now going through the low 6781.
These miners aren't getting any better. Anto's now doing 3.3, Fresnillo 2.9, Anglo's down 2.3, Endeavour Mining joining the party down 2.2. The top 4 losers in London are the miners, so watch out below. Next, you said they got downgraded?
Yeah.
They've been killed. They're down 1.9% to trade 140. Where else are we on? What reported? Where's just a quick
screen up, guys?
Just a quick update there. BP still managing to stem the flow. They're up 0.1%. Associated British Foods up 0.6, and IWG was the other one we looked at. They're down 1.5.
God, yeah, BP is your safe haven today, isn't it?
Yeah, BP is like, imagine a salmon swimming upstream. That's what BP is doing today.
Oh, you're reminding me of home.
They're just about keeping themselves in the blue as they go.
Yeah. Good, right, it's 8:13. We've got Elliot Harris coming up soon. He was getting very leery about me having to choose a restaurant, because remember, him and I have got a bet on first touch. Is the S&P going to hit 7,000? As soon as it does, I have to take Elliot out for a proper spanking expensive. Yeah, although I think he changed it to dinner now.
No, of course.
But he's a little bit further away than he was last week.
Yeah. And asking my question I asked you off air, I want to know the answer to that.
Yes.
Yep.
Good.
Cool.
Right, we're now getting echoing sound, so we will go to a break.
We'll get that fixed. Right, guess the chart coming up next. See you next time.
Sun comes up, rhythm in the data stream. The tick, tick, tick of the trading dream. Keep the morning turning, keep the wheels in time. With IG shining, everything's aligned. Hand to hand, heart to heart, we move together when the numbers start. Now it's time to guess the chart. Phil cues the cameras, Terrence has gotta play. Piers is talking tech in his own bright way. Chris reads figures, Luke's gone deep, and Axel is ready with his trade of the week. We're built on movement, truth and trust. A beat, a chart, a cloud of dust. Keep the morning turning, keep the wheels in time. With IG shining, everything's aligned. Hand to hand, heart to heart, we move together when the numbers start. Now it's time to guess the chart. Step to the rhythm, feel that soul. Every bell that rings is under control. No matter how the market swings, we find the joy that the morning brings. Keep the morning turning, keep the rhythm tight. From city dawn to London night. Hand to hand, heart to heart, we keep on dancing where the numbers start. Now it's time to guess the chart. Guess the chart. Can you feel it? Yeah, we can. Yeah, we can. Can you hear it? Yes, my friend. Yes, my friend. That northern soul, that trading spark. We're lighting up the morning dark. Yeah.
Oh ho ho, Elliot Harris in the room. He's just asked me if I'll let him out of the bet for free.
I'm not as confident as I was. I'll give you that, Richard. All fun and games. Interesting. I'll give you a chance.
Did you manage to guess the chart there, Elliot?
Oh, I didn't hear the chart. No. No, I didn't see the chart.
Live on air. Ravi calling me. Ravi, come on. You're meant to be watching. It is, of course, that Super Mario of Super Microcomputer. It's relatively boring, isn't it, considering what it had been? Or is the scale must be huge, yeah.
As charts go, I guess, yeah, if you look at the bottom index is at 15,000, it's more than trebled in a year, which is pretty punchy.
It's on that one as well.
That one as well, there you go.
Right, my friend. So what a journey in the last week, because let's talk about the breadth of the market. Let's talk about how everything has been absorbed, and it's not been absorbed with those rose-tinted glasses anymore, is it?
No. It's a slightly different piece of music, you could say. What I will say is macro vol is down across the board after the Fed, okay? But that Fed, that came as a little bit of a shock to the market, that they were fully pricing in a debt cut. Now it's only roughly 67% chance. So that came as a real curveball, if you like. Not many saw him taking that sort of stance. So debt's now
Chart up, guys.
up in the air. And also, you've now got lots of vol in January.
Sorry, 1 second, Ellie. Can we please have some concentration in the gallery? Thank you very much. So that's what you're talking about there.
Yes.
You think that's what has kind of absorbed all the bullish furor in the market?
Slightly. Obviously, there's
Doesn't it?
a little bit of gloss has come off the AI bubble, if you like. Certainly overnight.
Yeah.
But yeah, what went off on a week ago, that was probably 95%.
Done deal.
It really was a done deal. Yeah, so now, if you look at January, there's plenty of, okay, that's March, but January will be very similar. There's plenty of vol in there. So now, the market thought it had the dot plot all mapped out, and it definitely doesn't now. So there's quite a bit of uncertainty back in that space. For me, I'm concerned that the risk of further labour market weakness is probably a bigger risk than the inflation. I think that's what they're probably more concerned about. Yeah, so I do still think they'll cut in December.
Well, you do?
Yeah. But I can see that changing a lot over the next month or so.
Waller came out with an interesting argument yesterday. He said, if we're not getting the data, right, and we're now on day 35 of the shutdown, which is the longest ever. Some noise around it getting done this week, and to be honest, just get it over with. It's dull now, isn't it? But Powell was saying if we don't get that data, then we should slow down. But what Waller said yesterday was, no, if we don't get the data, we should definitely cut just in case.
Exactly. Yep. So I'd love to be a fly on the wall in those meetings. I really would, because someone's got to give. So, watch the space for that one. Obviously, last week you also had a very strong earnings season. I'll just do a very quick plug for a market which I know that you've discovered and had a good week on. We've just launched a binary market on earnings, which is not the easiest thing to price. So for those pro clients out there, if you click on watch lists on the platform, you'll see that we've created a nice earnings watch list for you. You've still got a couple there.
Yeah, I don't know how much we can talk about this.
No? Okay, apologies.
Apologies. But what it is for everybody to just have a look at, and it's a percentage chance of a revenue beat. Right. So if you want to look at this, it's actually giving you, and it's just, you can use it as an indicator if nothing else. It's the percentage chance of a revenue beat, right? So, for example, Palantir yesterday was trading at 69 to 74. Now, I thought there's higher chance of Palantir beating because Alex Karp just will not take, Palantir miss revenue numbers. So I was thinking it was going to be higher than 74, and it comes in at 100. But just use those as an indication of the chances of companies. So in other words, AstraZeneca has got a lower chance of beating revenues the market believes than AMD does tonight.
Yeah.
So yeah.
Yeah. So only available to pro clients as well.
Yeah. Chart off there. Thanks, guys. So, but earnings has been good so far.
Very strong.
Yeah.
Yeah. And obviously that's been driving a bit of the frenzy higher. But yeah, a little bit of the gloss has come off overnight. But as I said on the gold, I think it's all quite healthy to have a little pullback. So all it's allowing me to do is I'm just going in and just buying even more topside calls for deck in January. So.
Oh, you are?
Yep.
You're
I'm the
not
buyer of the dip.
You're not taking the whole sentiment thing.
Definitely not. No. The skew has definitely flattened on S&P. That's been jumping around. 3 weeks ago, you were looking,
Chart up.
and that's where I compare the vol between the 25 delta put versus the 25 delta call. What on a 1 month vol, it's gone from 99th percentile down to as low as 6th percentile last week. We're now back roughly as a median, so around about 50. But there's lots of demand, and I was having a look at the open interest. Lots of demand for some debt calls over 7,000, 7,100. Yeah, so not that I can talk my own book, Richard, because no one does that, do they? We've also seen, that's a contrast, if you like, to what you're seeing on the single names. On the single name stocks, there's a real clear bullish sentiment that's coming through on the single names.
Especially tech, I imagine.
Oh, man.
Yeah.
I was just having a look at the S&P top 100 names before I came on. The number of stocks where the call skew is actually expensive as opposed to inverted, if you like, is closer to 20%. Historically, that's closer to 3%. Wow. So there's lots of year-end optimism out there on the big single stock names. Yeah.
And that, was that last week before the breadth really narrowed, or was that because of the breadth narrowing?
It's definitely got stronger. I think when I looked last week, it was about 12 or 15%. So it's definitely got stronger. Be interesting to see what that looks like back end of this week after what feels like the first pullback we've had in a couple of weeks.
Yeah, and it's OpenAI that's driving this. Isn't it? OpenAI and Nvidia together, just doing deal after deal after deal. We saw it with Amazon yesterday. Yep. The dailies were interesting on Amazon yesterday.
It's not easy making a market on that.
I bet it's not.
It's really not. Historically, what you might say that Amazon vol on a day-to-day basis is 50 or 60%. I think our vol hit as high as 140, 150. It's aggressive.
Wow. And
it really is.
At 2:30, as soon as the market opened, it seemed to take a big jump.
Yeah, it came. The vol came off a lot on the open. Kind of the panic all kind of calmed down a little bit. Yeah.
And then it was incredibly stable after that. Amazon really traded around, sort of 255 to
in a very tight range.
257 all day. It was bizarre after a news story like that.
Yeah, but it jumps $10 on the news story.
Yeah,
and then just kind of just says, okay, right, I'm done for the day.
The market close been there.
Yep.
So it was 254 to 256 basically all day.
It's very tight range.
I'm not sure what that tells us about Amazon and about the deals now. It's relatively small. It's $38 billion, but over 7 years.
Okay.
And AWS already does, I think, 100 billion of revenues.
Yep.
So it's a 5% uplift to the revenues each year, if OpenAI survives, that is, of course, a whole 7 years. But the market doesn't feel like it's going to reward too many more OpenAI deals.
Yes, I agree. This is going to, for me, feel like kind of the next Trump tariff story. The market eventually says, okay, we've seen this, enough's enough. So a little bit of voice cries will, in some sense. So I do think the weight of it will definitely ease up in the next couple of weeks.
So the next thing really is the coming to an end of the shutdown. That's is there anything else positive you've had? We all know earnings season's great, right? That's in the price. We've had all the AI stories for now. We've had about 50-50 on stocks going higher or lower during earnings. in the Mag 7. And now you've got Powell saying interest rates by no means is it certain.
Yep.
Rachel Reeves now putting taxes up. What are you still grasping onto for that free dinner? It's tough, isn't it?
Yeah.
To see what the next big positive is.
Yes, I agree. The next Fed is middle of December, so there will be something in there, and I can't quite tell you exactly what that's going to be, because as you just listed, most of the catalysts now have been and gone. So
we need
what's the
data,
next
don't we?
catalyst? We do need data.
Yeah.
We do need data. How it's taken this long is just beyond me.
Yeah.
Incredible.
Well, maybe they don't want to show the data.
I don't think we're that bad.
Right.
What's on Rachel Reeves then, actually?
Yeah.
GBP's been under pressure for the last couple of weeks.
Yeah.
I was looking at a few charts, and I'm not necessarily from a charting background, if you like, but there were some people that were talking about a double top, and they can see that if we were to say breakthrough 130.50, even 130, maybe opens up 125. So
Yeah.
for me, the end of the month is enormous. Usually, 3 weeks out, you might get a little bit more of a steer on exactly what to expect. No one's got an idea.
No.
So that is as big a budget as has been, certainly from the last.
It does sound like they're getting all the bad stories out before the budget.
Possibly, yeah.
So I fancy, okay, we might see 129 print,
Yep.
but then I fancy it's actually a bounce on the day.
Okay. Be worth having a look at our weekly vols and certainly our daily vols on that particular day.
Okay.
I will say that FX vol across the board is at 1 year lows. So
Right,
if you did have a view on cable, it's not going to cost you too much. So worth a look on those.
Great. So that 21 pre-budget.
Yep. So
And then-
after Friday, we'll be offering a weekly that covers the budget. Yep.
On Friday afternoon?
We'll go live Sunday night, Monday
Okay,
morning.
right.
Yeah.
Okay, so Monday I have to put that into the
look at that.
the memory,
Yep.
because that will be interesting, playing that ARB over numbers.
Yep.
So what do I want to do then? I want to sell upside on the 21st and buy a call spread on the
After. Yeah.
28th.
Yeah.
Right, we'll get that done. Right, what nice charts have you got for me this week?
Let's have a look. What have we got? Right, so very quickly, gold vol has begun to normalise, down 1.5% week on week. As I said, macro vol on a global level is down, but actually what we saw was the rarely seen phenomenon of S&P up and VIX up.
Yeah.
So S&P was up, 0.7% week on week. VIX was up 1%. You saw a lot on that 2020, 2021 as we recovered from the COVID smash. But I'm hanging on that the market is definitely bullish. The degree of the skew on those single names is aggressive. 20%.
The volume.
Yeah, right. So very quickly here, just pulled up a few nice slides from the CBOE. Every quarter they do kind of a bit of an overview of the wider options market. So we're on track for the 6th straight annual record in terms of total volumes.
Wow.
Like what? Left-hand side to right-hand side, that's 2016. You couldn't have dreamt that the volumes would have got to that within 10 years.
No.
The famous stat that I'll always love to roll out is 2015. There were 10 times the number of futures contracts going through every day on S&P futures compared to options. Now there's more options going through than futures. And so
What's our own volume like on the platform?
I would say that our volume's gone up very similar to this, actually. COVID was the greatest thing that could ever happen to the options market.
Yes.
Volatility became such a buzzword that you just had to have in your portfolio.
Yeah.
So our client numbers have gone up 4 or 5-fold. Very similar, actually, to the sort of pop on the exchange volumes as well. So very sort of similar ratio. Obviously, we're expected to see over 13.8 billion contracts traded on the CBOE. We are a part of that, a very small part of that, I will say, but
Yeah.
we are now talking about an enormous market. September, you saw an average daily volume of roughly just under 60 million contracts. That was up 24% on last year.
And just look at what the Robinhood share price has done on the back of it as well.
Absolutely. Absolutely.
So this chart must be in line with your bonus then, surely.
I'd like to think so. Yeah. No, I wouldn't mind being at Robinhood. An almighty pop. Really is.
It's absolutely incredible. So now Robinhood's looking at a similar multiple to Charles Schwab.
Wow.
Similar market cap to Charles Schwab, which is just bonkers.
That is mind blowing.
Yeah.
So single stock flows increased by 25%. We're seeing an uptick in our single stock names as well. The dailies are extremely popular now. We're seeing more interest in our daily options and on the Mag 7 stocks than we have for a lot of traditional options that we offer. And this is the final chart you've got here. This is just explaining the top index option products. So you've got SPX that's way over there. What are you looking at? And almost 15 million a day, which is just, sorry, I'm blind. 3.7. What's interesting is the accumulation of the retail flow. Retail flow in the options market has never been as important as it is now. I would say more than 50% of the average daily volume that goes through is likely to be retail flow. 5 years ago, that was maybe 10%.
That's when you know that the market needs a slap.
It's been doing this for a couple of years though. For me, it's a wider emergence of the retail trader.
Mm-hmm. Yeah,
not only just generic, but also into options.
But on especially zero DTE options, right? That is there'll be a perhaps an unawareness of the risk that people are taking here.
Yes.
For example, 27 minutes time, Palantir zero DT options come alive.
We don't do Palantir but
it's not in the dailies, right? Sorry, right? Yeah. Well, Amazon then.
Yeah.
As you saw yesterday. So these people are not using these to invest.
No.
Right,
no.
And that is the message that we really try and give every day is the benefits of investing over the longer term. That's slightly different from what people are doing here. There's a lot of gambling going on in these, and sometimes I just worry sometimes if we get what the market does once every few years, like a down 7% in a day, people are going to get properly hurt.
You are going to get properly hurt, yeah. Roughly 57% of SPX ADV is on zero DTs. So you're talking millions of contracts.
What's the most important thing to avoid on zero DTs to getting hurt?
Obviously, selling options, it isn't for everybody. The beauty of a zero DTE is if you're buy side, the leverage that you can get. And obviously, buying options, your worst case. But it's a nice trade. So say you've got a view, say, on the Fed or things like this, you can trade an option expiring that day that has a value. And if you're buy side, you are aware of your worst case. So if you want some limited risk exposure, it's a lovely way to trade.
Yeah.
There's actually more volume that goes through, I think on the sell side, you get a lot of the algos that sell vol, and almost as you get a move, reposition, but that's a very different risk profile.
Yeah.
But this is where options are great.
But it's not, look, this market and the tech stocks aren't going to crash higher from here, are they?
No.
So it's selling puts that are the real danger. Being short vol, selling puts, that's where you're going to get.
Generally, but I would say if you've been selling topside this year, you've been stuck because
well, we know that.
Because of the way that the skew goes, you receive more for selling puts.
Yeah.
And certainly this year, any down move that we've had has been relatively short-lived.
Yeah.
For me, it's an up move that's almost like a slow death versus a down move is a quick death, if you like.
Now, the best advert for the daily options is Julian Wheeler, who's up next, because he gave me the view a couple of weeks ago that Amazon would be the best performer of results season. So I managed to take on some Amazon Zero DTE, and I think I owe him another bottle of whiskey. So I'm going to run now before Julian comes in, and Ange will be in to interview him and John Mayer. Fantastic show coming up. Stay with us. Elliot, thank you as always. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome to the show, and we are joined by the one, the only Julian Wheeler from Shant Capital. He is, of course, the US equity specialist and partner there. Thank you so much for joining us.
Thank you, Ange.
You're very, very smart today. Is this just for Trade Live with IG viewers?
I'd love to tell you it was, but no, because you and Rich will keep it nice and casual here. But no, it's because I'm being taken out to lunch today.
Nice.
And I'm pretty sure my host will be wearing a suit, so I do the honours and likewise. Actually, I'm being taken out to lunch today by a US small cap equity fund manager.
Oh, we like small caps. We like
Well, you know, this is where people say to me, where do I get all these ideas from? And the answer is we do our own research in-house, but we also invest in third-party funds.
Schmooze.
Yeah, well, smooth. No, but I mean, so here I'm a client.
Yes.
So I'm going to see this guy and he's saying, and so I'll talk to him about their 30 holdings in the fund and maybe get some ideas. And one of the things I'm going to talk to you about today, I shall see whether they own it.
Nice. I'm going to try and guess. Is this, obviously it's US, it has to be US. Is it NASDAQ? I like a tech stock.
Yes, it's NASDAQ. It's NASDAQ. Yeah.
Right.
NASDAQ.
Okay, so tell us. I'm
All
very
right.
excited.
So my sort of new idea to tell everybody out today is called Shoals.
Oh, I've never heard of Shoals.
Shoals technology, not to be confused with the your shoe insert, the Dr. Scholl's. This is Shoals as in a shoal of fish. Shoals technology is, and there it is, up on the screen there, chart.
It's looking nice.
It's
It's
looking
above
nice
all
now.
the...
It's turned back up. If you take that chart back, you'll see that they actually had a bit of a problem. You see, you go all the way back.
Let's get a monthly view.
There you go.
People. Yeah.
You're going all the way back to 2021.
Oh.
Which, by the way, is another thing I talk about. Of course, it came IPO in the bad old days of 21. One of the things people keep saying to me, when's the market going to top out? The answer is when you get too many IPOs. That's a sign of a market top. We're not nearly there yet.
No.
Not nearly there yet. So I keep saying the market's not going down. I'm sticking with that. Anyway, Shoals. The first thing about Shoals is if you look it up, and they're actually reporting earnings today. before the market opens. So
It's very topical.
very, very
Listen up,
topical.
yes.
Very topical. So Shoals, if you look at them, it says a solar energy systems company. And yes, that's true. They sell effectively cables and connectors within a utility scale solar system. And this is for the energy storage and the balancing, so load balancing. And what their product does, there we go.
Yeah,
What their
look at
product
you.
does
Here we are.
is, oh, somebody just flashed up on the screen, so they're a holder of Shoals.
Oh,
There we go. So basically, as you can see, all the pictures there are referring to solar farms. That is how the market views this thing, because that's what they've done. So their connectors effectively make, when you're producing all this solar energy, you've got to store it. So they're in the storage system, which is, you know, there are plenty of people doing that. They actually, the cable, the connector, they compete with big companies like Eaton, Schneider. There are a lot of people who do this, but they're not solely competitive. That's the first thing, is that these things can operate together. But what I think you're going to hear today is that Shoals is now starting to sell to
ooh, you're going to say my favorite word of all time.
data centers.
So this is very clever. So
Okay, because if you, what is going on in a data center? You've got a whacking load of servers running NVIDIA chips that are generating vast amounts of heat that need cooling from the likes of Vertiv and people like that. And it uses a lot of electricity. We all know that the gating system for data centers is going to be power, power connectivity, and so managing the electricity flow is crucial. Sorry.
Now, I take it that, you know, not only are they going to create the efficiencies for all this, but they're also the conduits, you know, the storage,
It's storage.
energy, and for the data.
The key point is that, as I said, everybody thinks it's a solar company. They will be able to show you that they're totally agnostic into what is the primary source of power. So if it's a coal-fired power station, data center, if it's a gas turbine one, I mean, you've seen
Nice.
massive,
Nice. It's a plug and play.
massive GE Vernova, Caterpillar for the generators. Doesn't matter what the power source is. That doesn't matter. So this is not a solar company. It's an everything company. Okay, so it makes these cables. Why it's had such a bad time is it had big problem through 23 and 24, where they had to repair a lot of their kit because they had defective cables from a European company called Prysmian. Now, Prysmian is
Italian?
Italian listed, exactly, although to call it an Italian company is not actually genuinely correct. Prysmian owns something called General Cable, which they bought, which is a US company. They bought that about 10 years ago. I used to be an owner of General Cable. So about 30% of Prysmian's business is in America. Key point is that Shoals were using Prysmian's cables. They were defective. The insulation didn't work. There is a lawsuit ongoing. This has been going on since about exactly 2 years now. 2 years, during which time Shoals has been responsible for, therefore, the renovation and repair and paying up on warranties for customers whose cables didn't work. They're blaming Prysmian. Prysmian is saying, no, it's not our fault. Anyway, I think Shoals will prevail. Shoals are suing for damages of between 50 to 180 million. Shoals' market cap is 1.8 billion. So you're talking 10% of the value of Shoals that I think they'll get from Prysmian in damages. What Prysmian might choose to do, they have made no secret of the fact they'd like a US listing. Rather than pay Shoals if they lose this case, why not buy them? Why, think of the payment, their damages payment as a down payment and buy the whole company. Now, you know, can't tell you that's going to happen, but that's what I'd do if I were Prysmian.
Interesting. And also for Shoals itself, you know, you mentioned it's an expected 20 PE.
Oh yes, okay. So what are we dealing with? I've actually got a value stock. You know, value stock in the world of data centers and AI is pretty hard to find. I say value. It's on. So today I expect them to produce about 130 million in revenue at about 13 cents a share of earnings. So 4 times 13, 52. It's a $10 stock. $10.50 stock. So it's only on 20 PE. Never mind last night's Palantir, you know, it's on 50, 100 times sales. This is on 20 times earnings. So it's profitable. It is, it has the momentum, a new business line going their way, and it's pretty undiscovered. I mean, look, it's moved up. Clearly, somebody's been buying. It's been moving up, but everything's gone up.
Yes.
So I think there's a lot of room to run with that stock.
Speaking of which, all these conduits, data centers and such, another one that our clients and our trader friends are very excited when you come on because you talk about it, MongoDB.
Oh, MongoDB.
Yes.
MongoDB. So I'm just checking up if anybody's on that one. No, but somebody said one Julian to another, thanks for the Amazon trade last week. So thank you
I was
to
on a
other Julian.
flight to the time and
You did.
could not take advantage of
Okay.
it. But when I was in reception, I did see the messages come through.
Oh, that's good. Well, that worked. MongoDB has unfortunately, it's front run me again. This is really annoying. I was all set to come on and tell you Mongo, ahead of its earnings, it's starting to break out again. And then yesterday they pre-announced the earnings along with a new CEO. This is a big deal.
I know you're very excited.
Big deal. Okay.
CJ.
Shares my initials. CJ. It's true. I'm actually Charles Julian, but I'm. So CJ Desai. CJ Desai is one of the sort of rock stars of software. He started out at Oracle, but we won't hold that against him too much. He then went to ServiceNow. And ServiceNow, a lot of people will know. He basically helped ServiceNow grow its revenue from about $1 billion to 10 billion. He knows how to grow already big scale companies. A year or so ago, he turned up at Cloudflare, which is another of my favorite stocks. While he's been there, stock has tripled. Now, it's not entirely his doing, but he is head of product. He gets things right. He's now for him to walk away from Cloudflare, which is just doing so well, is because he's got the top job at Mongo. He's a product guy. He knows this product is right. So there's Cloudflare, right? So Cloudflare's good. Their earnings were great too. These are what we call the mini. I'm now calling these the mini mags. Okay, the mini mags. We'll make my own mini mags. Would be Cloudflare, MongoDB, Snowflake, Databricks if it was public, but it's still private. This is the next level of cloud-related infrastructure. The lots down. They're all really expensive because the market always knows.
What's really interesting though is CJ Desai, is that right?
Desai?
Yeah. CJ is also someone who is really, really experienced in the AI space. Now, this is an interesting juncture because the last time I spoke to you, which was October 8th.
Okay. What did I say?
Memory of an elephant here. We were talking, Julian, about, the potential for this AI bubble to start. Yes.
Oh, the bubble. Okay.
Yes. So, with that in mind, would you still say it's now still a good time for those of us that are concerned that we are at this critical pivot point right now? Do you wait and see or do you dive in now?
Well, I think you've got to decide what your time frame is. You've got to decide what your risk tolerance is. If you have nothing, this is why I'm coming up with an idea like Shoals, because Shoals is fairly undiscovered. Amazon was in the sin bin, as I said. It's now already, it was 215 when I came on 2 weeks ago. It's now 260. The moves are quick and fast. This market, this is what, when people say to me, what's different? It's the speed of adjustment because there's so much information out there. There's so much web. There's shows like yourself telling everybody what to do.
So everybody, second by second, right?
Everybody gets to everything much faster. So the time frame of investment has shrunk hugely in the tech space. It's very hard to, but what happens? So you've got to find something where you can disagree with the market to get paid. Or you can just sit and hold it. So you asked me about that. The likes of Palantir, we talked about, reported last night. Great earnings, the 50% revenue growth or whatever. But the price it is, well, it's too easy, the old, better to travel than to arrive. We are arriving with Palantir. There's some YouTube bloke on yesterday saying, totally justified at 400 PE. Does he really know what he's saying when he says that? I mean, I think the guy's a cretin, frankly. You can't say fully justified. 400 PE means 400 years of these earnings. But think about that.
That is-
These companies sometimes don't last 4 years.
Yes.
So it's lunacy. But it becomes a greater fool theory at the moment. Who's going to sell first? Oh, after you. No, after you. This is what I've
Left
said.
holding the baby.
Who's going to be left holding the baby? I'm talking about Pass the Parcel and the Bomb with Rich last time. But so, yes, you can still invest, but you've got to be prepared to say, look, my tolerance level, and then you've got to be one of these buy the dippers, the stuff you like. So you've got to size your position accordingly. Or you do like I will for some clients, is I have some shorts on. So that if the market pulls back,
You've got some insurance.
yeah. And rather than just buying market puts, I like to, find the companies that I think are doing badly.
Well, there are certainly loads of those because around, and I like the way you've pitched the whole speed of change because boy, I've just traveled back from Asia. We're messaging each other at the time, and the speed of change there is even faster.
Come back with any ideas from there for me?
I did actually, and we'll talk about that possibly in the next show because we need to get through some other calls here. So 2 sectors I know that you don't like.
Yeah.
Advertising, I totally agree, and interestingly, consumer brands as well. Talk us through those 2.
Okay. Well, I'll just touch on consumer brands very quickly because that is such a massive thing. But it's consumer branded products in the US was, if you go back, what was known as the Nifty 50, it was from Coca-Cola downwards. These were the stocks. This was the golden age of American consumer stocks. You can think of them all. They're all household names. We all know them. Right? Procter & Gamble, Colgate, Clorox, Kimberly-Clark, Gillette. The names, they trip off the tongue. These all, and they got valued as if growth was never, ever going to finish. And it has. I don't believe the next generation cares on which brand of kitchen roll it buys or which cleaning fluid or which detergent. I just don't think it cares. And the reason it doesn't care is because it doesn't get advertised at.
That's right, and I agree with that because we now live in a world where there's no broadcasting, is there?
Broadcasting and traditional media, we all know has changed. We all watch our Netflix, we all do whatever, our own thing on YouTube, and we all watch at our own pace and what we want.
In our own time.
In our own time.
And we watch Trade Live with IG.
We watch Trade Live with IG in your own time, you watch it back. So, you as an advertiser don't have this mass audience.
Yeah. Pay this, you're going to hit this audience.
And you're going to hit this. But it's not just that, it's the fact that the power of advertising has been lost. It's been pushed away. We now start to know, I'm going to take you back in time. Do you know who John Wanamaker was?
No.
No, I'd be surprised if you did. 20th century American
Older
industrialist.
than my looks.
You have to be very old to have known John. John's dates are like 1890 to about 1940. He was one of the original US industrialists. He was one of the first, if not the first, owner of a department store. And he is the man, it became what became Macy's. He is the man credited with the wonderful phrase, I know that I waste half my money on advertising, I just don't know which half.
No.
You never heard that? That's what he said. Well, guess what? I think now we do know which of our advertising. Advertising is now laser focused.
Do you mean this man?
Demand,
Is that him?
pricing. There you go.
that Wanamaker?
John Wanamaker. There he is.
Oh my goodness.
He is the man who said, half my money's wasted, I don't know which half. Now you do. The likes of Meta and Google and their laser digital advertising, you can be so precise. You can advertise personally, as we know. We're going to get dynamic pricing on airlines. You're going to have an individual tailored advert, etc., etc. So you do. Well, what does that mean for the advertising industry? Half of it's going.
Gone. Or if not more.
Well, if half of it's wasted, as we all agreed, let's not waste that half. So what does that do? Is at the same time AI is coming along to replace jobs we think about, it can certainly come in and do creative stuff. You can just ask it to come up with something. I have a friend who's a fashion photographer. He used to head off to nice beaches with sort of beautiful, scantily clad ladies and photograph them. He says, my job's finished.
Pirelli used to...
The Pirelli
Yes.
calendar. Marvellous.
My father used to shoot the Pirelli calendar.
Did he?
He did. We still have tons of it in that.
You know they're worth a fortune, those calendars.
Yes, so we still keep them and all put in dark spaces. But full disclosure, people.
Wow.
I am the child, the product of.
We're not the product of the Pirelli
No,
calendar.
not the product. Could have been, actually. It was so steamy. Even as a child, I thought, what are you filming? What are you taking photos of?
Oh, they were wonderful.
But my dad used to work at a company that was swallowed up by WPP.
Well, WPP is where I'm going with this. WPP produced earnings or lack of the other day. It's dropped 25% in the last 4 days.
Look at that stock. Trader
WPP
friend,
is
look
trading
at
on
that
4
thing.
times earnings. I mean, you don't need WPP anymore. Well, that's what clients are finding. I mean, they are losing accounts. They don't need them. They can do it in-house. They can do it with AI. They can do it. So these heavily people-skilled businesses, so advertising is one. Consulting is another.
Accounting?
Legal, accounting. So that's why Accenture's an avoid stock. There's WPP. I mean, disaster. So when I talked about shorts, Omnicom is the US version. Omnicom has plenty more to fall, in my view. And what they're doing, back to what I also came out with about the, so I think that'll have another leg down shortly. These are the stocks to be short. And people say, yes, but look how cheap they are. Cheap is not a reason to own a stock. It's got to be. It's cheap for a reason. You've got to have a catalyst, right? So when I said Shoals is cheap, I mean it's cheap relative to its peers, but it's going up.
And it's got a catalyst.
It's got a catalyst and it's turning round, and we know what was going wrong before. WPP's in trouble. Omnicom's in trouble. They're all in trouble. Accenture's in trouble. All of the heavily people business. It's not that these people have suddenly lost their edge, but you cannot bill for the same amount of hours. You can't say to people, "Oh yes, let me charge you."
Take
the
5
day
days.
of Mad Men, the lovely Mad Men age
Unfortunately.
is over. Yeah, they all look good in those 1960s suits. I put on a suit for Mad Men. No, it's not the same.
It's
It's
definitely
not the same. So I think that's a problem. And branded products, they're showing it. That's why Kimberly yesterday announced it was buying Kenvue.
My goodness, and we saw the
Right?
reaction to
Well, the
that.
reaction was what Kimberly have taken on there is, yes, some good brands, but a load of legal problems.
Look at that.
Load of legal problems. That's what they decided. So that is a transfer of wealth from Kimberly to Kenvue, but actually it's just a destruction of wealth overall. So the market is saying, we don't want this. We don't want mergers of 2 drowning men and their straws. Clutch away, but you're both going over the rapids. This is not a good sector to be in. None of it.
Interestingly enough, when I was out in Southeast Asia, there is this ongoing drive, as you say, to go to brands that not even advertise, and the generics are doing very, very well.
Well, people don't, as I say, they don't care. Or you have things like TripAdvisor, Trustpilot, and all these things. We now find our own stuff. You can't just push us an advert and sell us a dream. The 1950s, consumerism, 60s is gone.
What does matter is, because of AI and all that, authenticity and real people are becoming more important. And so I found that all these, Korean really best-selling products, which I'd never heard of, outselling all the usual brands,
Right.
because they had an authentic person talking about it and trialing it for real. That Pop Mart thing that you introduced to me,
Pop
I
Mart.
could not get away from it. Complete, K-pop demon hunters when I was not in the rainforest. It's just everywhere. But yet again, it was, being promoted by real life people.
Real life people.
Whether it's events or whether it's on YouTube or whether it's shorts.
It's a long way from an advertising agency.
Yes, it's a long way away from an advertising agency.
There you go.
Right. So, yes. So
What else we got? Funko,
loads.
which, as you mentioned, Funko reports on Thursday.
Does it? It's still a bit too funky for me. I have to say.
Okay, it's still there. I just mentioned it again because, I have to talk about the ones that don't work as well. They haven't worked yet.
I remember you saying this is a Hail Mary.
It's a Hail Mary.
Mary.
Obviously, a reduction in the China tariffs, by the way, is a help. This is the other thing. We've got a lot of stuff this week. We've got Tesla's pay packet, or rather Musk's pay packet, but Musk and Tesla are sort of intertwined. Norges, the big Norwegian sovereign wealth fund, has come out today, so they're going to vote against it. I do hope people vote against it. I mean, just for the reality and sanity that nobody should get $1 trillion pay packet. It was lunacy. I mean, you talk about if you talk about world inequality, we won't get all terribly political, but I mean, he is the absolute kingpin of this. He owns plenty of the damn thing anyway. And where's the... Now, people say, oh, yeah, but he's going to have to perform. But it's all wrong. All wrong.
You know it's going to get through.
Well, let's see. Let's see. Let's see.
It's a poll. It's a poll.
It's a poll.
Thank you so much for joining us. And trader friends, I'll send you the address of where to stay. No, I won't. But have a lovely time during your lunch.
Thank you. I shall have a lovely lunch, and I shall discuss Shoals with this fund manager and other things, and I'll have hopefully another good idea to talk to you about in a couple of weeks' time.
Yeah. Well, I'll be watching Shoals with my BDI.
It's not about today's earnings, by the way. It's about a directional travel.
Yes.
That says, oh, this company is more than just what it thinks it was before.
Right. Thank you very much. We have to get him on his way to this lunch. Donny, everyone, Marco Polo, saying thank you. Julian, to another Julian as well, saying thanks for the Amazon trade last week. Right.
Fantastic.
Stay right there. We've got John Mayer, mining analyst, up after this.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves. Welcome to the Art of Investing, a brand new podcast to help you achieve your investing goals. Join me, Rich McDonald, and my co-hosts, Mark Spice Holden and Chris CJ Fellingham, every Friday when we bring you updates from the markets and insights from our combined 100 years of investing experience. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
traders, welcome back to the show. And from one expert to another, we have John Mayer, partner and mining analyst at SP Angel here. John, good to have you back from Malawi. Have I got that right? You're such a world traveler.
Yeah, no, we were in Malawi for a week looking at some mines.
Wonderful. Good to have you back because I've been away as well. How did the mine visit go? You sent me some early pictures. I think we were away at the same time.
Yeah, look, Malawi is an easy country. We went up to the north to see the Lotus Resources uranium project, and they've just started operations up there. And then we went back down to the south near the capital, Lilongwe, and we were looking at sovereign metals and all the work that they're doing with Rio Tinto on that rutile and graphite mine. Now, rutile is the best feedstock for titanium metal production. And so it's a really important project in terms of, shall we say, making all the things that require titanium metal. So, yeah, it's good. I mean, this is the big one. It's world class. It's great scale, and Sovereign are very lucky guys to find it. And it was an accidental find. They were out there looking for graphite, and suddenly they say, well, what's all this titanium stuff doing here? And rutile just happens to be the best value product in the market for that, or best value feedstock.
Sometimes the best things happen out of, serendipity rather than plans. Pleased to have you on. Speaking of plans, I did have plans, as you know, to take risk off before I boarded that plane because I knew that I was going to be out of Wi-Fi. And pleased that I did that as well and took some risk off because I didn't want to be checking in the middle of a rainforest. There's no Wi-Fi anyway. But taking a look at gold first, because when I arrived in KL, my stops went pinging the moment I got to the airport. It has come back down, is now just under that 4,000 an ounce level. What's your outlook now? We just, is this a minor just correction before we head up higher, or do you think we're going to be stuck in this sideways trade for a while?
Look, this is a really hard call right now. It is consolidating at $4,000 an ounce. I'm guessing there are forces in this world that are holding the price up because the average production cost is probably around $1,200 an ounce right now. Not that there's a huge production response. To be honest, there's lots of problems in countries like Mali, for example, with gold production, and so it's not as if the world is suddenly going to get flooded with new gold. And the market for gold is very much bigger than the supply-demand equation because it's so used as a financial instrument. We still haven't seen all the factors, I think, that have driven the gold price up to here. Yes, the price peaked during the Indian festival of light called Diwali. Yes, gold has peaked ahead of the removal of certain tax incentives or tax breaks in China. But there was much more going on here. This is central bank scale stuff. There's also been a huge switch out of risky commodities into hard assets, not just gold. And when I say hard assets, alternative assets, I mean. So it's gold, copper, other metals, but also cryptocurrencies and anything as an alternative.
Interestingly enough, my platinum palladium stops also pinged. Pleased that I did that because I wanted to lock in profits. I was in Southeast Asia for Diwali. They call it Deepavali there. And if you had stocks in companies that made fireworks, you would have been well in the money. But talking about gold, I mean, I know that you talk a lot about, the Fed pause, and also you look at ETF gold investments. That's been falling, just a touch, not a huge amount. But is this cause for worry?
Well, as the gold price was rising, ETF investments were definitely increasing. So there was a momentum trade going on there, and probably some big US funds, maybe some hedge funds, buying into that. And yes, those ETFs are some of those ETFs are being sold. So I see this as profit taking around the margins rather than anything of great scale. I don't think this trade of selling out of dollar treasuries and the US. I don't think that's over. But at the same time, I wouldn't be betting against the US either, because the earnings, the technology earnings season in the US seems to be going really, really well. In fact, from my perspective as a bit of a technology outsider, I think it's amazing. I mean, some people might be disappointed. They might be looking for much stronger growth, but the growth numbers to me look fantastic.
Interesting. Whilst I was in Asia as well, I had to bite on a stick at one point because I am still keeping an eye on the likes of Surabi Gold. Many of our clients have a position on this. And this is the monthly chart, trader friends, as you can see here. But if you look at the daily, you can see it has had a bit of a wild ride whilst John and I were away. It's starting to move higher now. It had that very interesting formation that indicated perhaps a turn or a mood change on the 28th of October. And it's now poked its head, price action has poked its head above all three EMAs that I've drawn for you. Thoughts on Surabi going forward, because its earnings are quite soon, aren't they?
Well, the last quarter did very well. I mean, 12,000 ounces of gold. That's $48 million at $4,000 an ounce. So those are good numbers. They're on track for 44 to 47,000 ounces this year. So again, it's got the best growth profile of a gold stock in the London market right now. So Surabi looks good, and I mean, all credit to the management team for creating that growth and making it work.
Greatland is another one. I think Andrew McKilvey's got Greatland. Thoughts on Greatland, because it had a similar. Cam's got Greatland in the gallery after hearing you talk about it so much, because this has had quite a correction as well. Just having a look at that. This is Greatland Resources, taking a closer view there. Here we are.
I find that correction quite interesting. It says that there was perhaps some leverage money that was going into these stocks as following the momentum trade, because they shouldn't be coming off like this. The gold price is still up at $4,000 an ounce.
Exactly.
Greatland produces gold at $2,100 an ounce. Okay, so it's a high. We would consider that normally to be a higher cost producer, but it's still making $1,900 an ounce, and you're talking enormous scale here. I mean, these guys did really well. They acquired the Telfer mine off BHP. Off Newcrest.
And Telfer's doing well. Last time I checked.
Yeah. That is doing very well. I mean, these guys have scaled up at the best possible time. They've got in there, they've made it work, and sure, they produced 80,000 ounces of gold in the last quarter. That's if I'm right, $480 million. It's I mean, these stocks are going to be like tech stocks going forwards. The growth is enormous. Now, the risk is that gold prices come crashing back, but gold seems to have formed this something fairly solid at 4,000, and whatever's holding it up seems to be working. So I'm still a buyer of these stocks.
Let's have a look at copper as well, because we've got quite a few trader friends. If you like this and the interview with Julian earlier, and a lot of you said thanks, please slam the like and subscribe button, because that just means it will give us, it really does make a difference. We can bring more of this amazing analyst and boots on the ground content to you. I have had to fly halfway around the planet, so has John, to give you this analysis. Copper, we currently have a mining copper miner listening to our interview right now as we speak. I won't tell you who it is until later, it'll be a surprise. But copper prices have been easing recently due to supply disruption, John, which I'm sure you all across like a rash. Is it still going to be the year of copper in 2026?
Well, I'm personally very invested in copper. Because I do see shortages developing next year. You've got the Grasberg mine offline because of this enormous mud rush that sadly killed 5 people. You've got other problems with copper exports out of Tanzania right now because of all the political disruption and the number of people being killed out there. So shipments of copper coming out of the Congo, for example, are now being rerouted through Mombasa, and that's not a great port either, frankly. So it's the problem is because the market's so short of copper concentrates, and China has ramped up its copper concentrate or copper smelting capacity, but it simply can't get the concentrate. So what it means is the cost of processing that copper into copper metal is very cheap for the miners. So you do want to be invested in these copper miners. And I mean, Antofagasta is the classic stock. It's,
My first ever trade, Antofagasta.
Well, that was,
Never forget.
I'm sure that was a good trade to start with, and they're very good people. So it's a quality stock, but of course it's at a premium rating. So there are other copper plays around, but there are never enough of them. We've got First Quantum Minerals in Canada, there's Freeport. There's a few of these things, but and you can buy into Glencore, Anglo American, BHP, Rio Tinto. And remember, the Teck Anglo deal is all about copper. It's about combining copper mines, putting things together. So there's a deficit coming, and nobody quite knows how to fill that.
Interestingly enough, whilst you're talking, I'm just taking a look at Anto, see if there's a double top there. But we've got questions from the floor as well. Let's have a look at that. Andrew McKilvey, another expert in the mining space, asking, is the tungsten resource at Greatland of much value? Do you have any insight to that, John?
I've not been looking at that tungsten resource, but tungsten prices have been going better. It is a critical metal. It's a very important metal, and I think anyone with a tungsten mine should do quite well out of that. We've been looking at more closely at Tungsten West, for example. I think there's a better future for that mine going forwards with strategic minerals. At Redmoor, if you plug in today's tungsten price, Redmoor starts to look like a good project. So there's a lot you have to do before you turn a project into a mine. But certainly anyone in the tungsten space they've got the price on their side right now, and that's really important when you're starting these things up.
Interestingly enough, I was in the state of Pahang in Malaysia, where it wasn't actually too far from a company that you cover. So, am I right in saying you cover Lynas Rare Earths? Is that right, Lynas itself?
We know it quite well. Yes, they've been making interesting comments recently.
So for those of you that watch the space, you'll know that Malaysia has been cutting deals to process rare earths for China, and there are places that are springing forth. You only know where they are if you know where to look. But I have a map here that I'm going to try and bring up for you, which I had prepared earlier. It's now decided to hide somewhere, but I can type it up for you as I'm trying to look for it. The wonders of the internet. But maps, if I can spell. Here we are, Google Maps. So Lynas, Malaysia, is located in Kelantan, I believe. And the Pahang Elephant Sanctuary, which I visited, is just about an hour and a bit away, almost 2 hours. But it's one of the real big things at the moment in Malaysia, where many of these manufacturing processing plants are springing up after that deal. It seemed from Asia, John, that the moon music between Trump and Xi appears to be sweetening. Is that your take on it, or do you think we could have potentially more ructions to come?
My personal take, and this a lot of people may disagree with this, is that it didn't go well at all. I think Trump and Xi were being polite and diplomatic.
They didn't look each other in the eye, did they? They just didn't.
Exactly. Well, I'm not sure Xi does a lot of that anyway, but and Trump loves to try and disarm his adversaries one way or another. Trump gave them 10% off tariffs that had been raised anyway because they were going to be nice about not supplying fentanyl into Mexico and places like that. And the fentanyl ends up in the United States and is killing a lot of people, unfortunately. So, but he didn't give ground on other tariffs. So for me, this looks like a bit of a disaster for President Xi, because Xi needs to export more products into America. They need to access the American consumer, and selling. You've got to give credit to Xi and his colleagues. They've been working really hard at selling Chinese manufactured goods around the rest of the world, with the BRICS countries, with everybody else, whilst trying to undermine the US dollar at the same time. And Trump's just not giving in. He's saying, no, we want the manufacturing back. You've been subsidizing your manufacturing in China for years. You've not been playing fair according to World Trade Organization rules. So we're going to raise, you're going to have to suffer higher tariffs. And these tariffs are at a large level. And remember, Trump raised tariffs in his first term, in T1 as they call it. Biden did not roll back on those tariffs at all. So those tariffs stayed in place. So, even when Trump passes on and the next guy takes over, those tariffs are likely to remain. So China is going to have to work very hard well, it's either suffering a huge loss in margins in order to sell products into China, or it's going to lose a lot of customer base. So they're also working at ramping up domestic demand in China. But of course, that costs money, all the coupons, vouchers, incentives, because the Chinese government, I spoke to a Chinese guy recently about whether the government might actually help to ramp up wages and salaries within China, and he looked very doubtful about that. So maybe the way they'll drive the consumption is through sales incentives, festivals, and the coupons, and that's what they've done in the past. So they're going to have an awful lot of electric vehicles to sell domestically, because it's possible the rest of the world might not buy them quite as fast as the Chinese are manufacturing them, and quite a lot of other stuff. If the Chinese aren't going to be buying a lot of manufactured product if the Americans aren't going to be buying so much, where's it all going to go?
And interestingly, this is music to my ears, because I am looking at a theory that it didn't go very well. They did the handshaking and everything, but actually behind the scenes, it didn't go very well, and therefore we're still going to see a squeeze on rare earths. And I've been looking at the rare earths miners and refiners. These are some of the biggest by market cap. We got China Northern MP, Lynas, of course, very high up there. I just showed you the facility in north of Malaysia, the peninsula, and we've also got Shanghai and Energy Fuels as well. So all this, to me, John, means that it's going to be a further squeeze on and potentially those companies producing rare earths will see their price action head back higher.
The managing director of Lynas said the other day that although the Chinese had said they're not going to impose more restrictions on rare earth exports this year, she then said, well, look, they're going to be difficult about sourcing the specialist equipment for rare earth processing. So Lynas is in the process of ramping up. They've got a big expansion planned for their Malaysian facilities. Plus, they've got a new rare earth magnet factory going in as well. And she didn't say this specifically, but it sounds to me like they are experiencing problems in sourcing the equipment that they need and want to buy from China, and that for whatever reason this stuff is either being blocked or whatever. And as always with China, look at what they do and don't listen to what they say. So yes, it all looks very cordial with the US on the surface. I think underneath it's not. Remember that China is still supporting Russia in its invasion of the Ukraine. And of course, Trump is not going to be happy about that.
Funky Gibbon, good morning to you, chiming in there. Funky Gibbon has a question to you. What are your thoughts, if you have any, on Sylvania Platinum? And I'd love to hear your outlook for platinum as well. because I got stopped out. I'm looking to see whether I should get back in or not.
They're a great team, and PGMs have done very well following gold higher. There's no doubt that with gold at $4,000 an ounce, platinum and palladium as jewelry choices look better. And of course, people are buying a lot of hybrid cars these days. So the auto catalysts in those cars, three-way catalysts, platinum, palladium, and rhodium, have to have quite good loadings on those catalysts because you've got stop-start engines, you've got smaller engines that quite often need just a little bit more exhaust treatment. So yeah, it's there's a future there in that market, and I think it's definitely lifted by the fact that gold has gone so much higher.
Also, lots and lots of interesting from a technical viewpoint as well, because we see a lot of tombstone-ish dojis here for Sylvania Platinum, so keep an eye on that. Palladium, any thoughts on that? Spot palladium has fallen some 3% to 1,000, just under 1,400 an ounce.
I just think that's market trade. I don't see. It's possible the Russians may be pushing more of that into the market because historically Russia always had a bit of a palladium stockpile. They were the big producers. Some mines are more platinum rich and some mines are more palladium rich because the two metals always occur together. And I suspect that there's just been a bit more inventory to push out into the market.
And one more from R. Sachs chiming in. Any thoughts on Kamare Resources, which had a bid in June, which they rejected and have fallen since? That question from R. Sachs.
I wish I could answer that. I'm sorry.
I'll try and find out for you, R. Sachs. Thank you, John, for all the questions that you've answered. It's been such a pleasure. Welcome back from Malawi, and looking forward to catching you offline as well. Do slam and hit the like and subscribe button. Funky Gibbon, all of you, you get to ask the questions here live. So make sure you hit that like and subscribe and share this with your like-minded trader friends so we can bring more of this content straight to you. Right? Thanks so much, John. We'll see you later.